Good afternoon, everyone. Welcome to the stock market update video. And today we actually have a lot talked about, even though QQ closed as flat as it can and SPY is slightly up. But we have a couple of tech stocks where Apple was red, and you can see Meta had a bull break, as well as Microsoft is flat. Google also had a bull break. So we'll have to take a look at all these big 7 tech stocks: Nvidia, Tesla, Apple, Amazon, Google, Microsoft, and Meta, to give us a better understanding of where the most likely scenario, where QQQ will likely be going, because those 7 are the biggest weightings. And QQQ as well will be leading SPY, because SPY have a big holding of tech stocks. All right, so we'll also take a look at the semiconductor sector real quick, to give us a better understanding if this could potentially mark the temporary top for us in the market. I'm not saying this is going to be the top, but if the semiconductor sector started pulling back a little bit more ahead of QQQ, will this also mark the temporary top for QQQ as well? All right, so let's take a look. So we're going to go from QQQ to SPY and the rest of the 7 big tech stocks. So if you want to skip to your tech stocks, click that timestamp below. I have it in the comments or in the descriptions. You can just click that timestamp and it'll jump that video to that timestamp. And I also got a new mic today, so let me know in the comments below how the new mic sounds. And of course, you guys always got any questions, just feel free to comment below as well. All right, so we take a look at QQQ. So QQQ had a bullish morning. You can see we were higher, and then we touched that double top resistance over here, this resistance zone, and we rejected it again, and we came back into this prior zone. So are we able to say this is, a bearish reversal candle on the daily, or we can potentially retest again tomorrow? So will just zoom in a smaller time frame to give us a better understanding of what the underlying price action is. So right now, so this is the morning move. Bears had a big enough drop where the next move they confirmed an hourly downtrend. You can see this hourly candle went below this hourly candle. This is the 369 low, and that's the hourly downtrend confirmed. But due to the size of this bounce, where the bulls bought the dip, it was a bear break on the hourly, lacking follow through. So as long as the bulls are able to hold above 370, it will likely probably test this 371, 372 zone again because of this lacking follow through from the bears. I'll argue that we never broke above this resistance, so just into rejection. Key zone for me is for the bears. We need to break this pivot low on this 369.4. Even if we break this, it's not that big of a deal for the bulls. The structure that we want to break is to break below this 369, which is prior pivots and prior supports. So if you do break that, then we're probably coming down to this 365 zone. Well, likely test 367 first before we test 375. There's also not a lot of support around these levels because of how fast we ran up. So those are 2 levels I'm looking at. If I'm a bear, I want to see us break below 369, reconfirm the hourly downtrend. Because doesn't mean this hourly downtrend is negated, because bulls did not go above the prior pivot. So this is the top of the pivot. This is the hourly downtrend confirmed. We bounced, but the bulls bounced back above this pivot right there. That should have been the green flag for us to continue again. But we also lack bull follow through there as well. So we'll see we are lacking follow through from either side. So right now it's indecision from the market because lack bear follow through, lack bull follow through. So who's going to be following through right tomorrow? So this pivot levels are key for us, just to know the very short term, very short term, which direction the bulls want to go or the bears want to go. So as long as we break this 369, that'd be a clear early downtrend confirming again, or not confirming, it's already confirmed, but it'll be continuing of the hourly downtrend. If we do break back about the pivots, then likely retesting this morning high again, 371. If we do break that, we're going to test the 52-week high, which is this candle right there. This is a clear bull break with back follow through. Broke, came right back into the price action and went lower. We'll see if we get something like this again. Break above, down, and go lower. So that would mean that this was a distribution zone where I talked about it could be potentially a distribution zone where market goes sideways while they're selling into it. Versus a accumulation zone, meaning they're buying it while it's going sideways for the next move up. Market is still in a extreme greed and the sentiments, so we got to be cautious up here. You don't want to be buying stocks after it's run up 3-4 days, right? You want to be buying when it's dropping like this, consolidation. Support, you can add and set your stop loss. You can see all the support prior. Support. You came down to it there and then bounced. This is the area where you likely add and set a stop loss below it if you're wrong. If it continues, right? If you're right, you get make some gains and take profit. You don't want to be adding after it's like a 3-day move. Gap up and 1, 2, 3, 4 days of right? You want to be adding up at the resistance. There's not really, even though it goes higher if you're right, that's not a thing that a trader wants to do because we want to discipline our mind to do the right things for the long run. That'll help us trade better in the long run because trading is a long-term game. All right, so if we continue that early downtrend tomorrow, then I would say this likely the temporary top, but we still have so many supports below us that the bears need to break and the structures of the chart to break to even have anything substantial going for the bears. We're still in an uptrend on the daily, on the weekly, on the monthly, and on everything except the smaller time frames where the hourly is on the downtrend. Other than that, bears don't have anything. We're still above the 12 EMA, the steel looking line. Unless we start to form that equilibrium that I talked about, where we tighten up, every move that it gets is tightening up lower than the prior move. You move down, the move up will make a new high, the move down will make a new low. Vice versa. Every time we do just the move, that's an equilibrium, tightening up. And then once it finishes tightening up, then it can decide where it wants to go, bear break or bull break. So that's usually the scenario what happens when we have a big move down and also a retracement of almost all of its drop. So we'll see. If it starts to drop another red day tomorrow, then that's likely going to shape up an equilibrium. For me, it'll just be chopping the sideways zone. All right, let's take a look at SPY. SPY, very similar, flat. It's very, just call it a quadruple top because it's just, you can see all these wicks and test again, couldn't get over again, couldn't get over. This was the 5th time. Let's call it quadruple or pentadruple, whatever it is. Yeah, very clear resistance zone. Everybody's looking at the same resistance zone. So essentially, these lines are just lines, but it's just the psychology of everyone is looking at the same zone, right? If everyone is looking at the same zone, then people are probably selling in that zone, and so that makes it more valid, right? For the diagonal lines, it's a little harder because everybody can adjust their lines slightly this way or that way, and the diagonal line just looks different. So it's just more of a visual guide, where I always talk about those wedges are more for visual guides, and those are like psychology of the pattern. It's more important than the pattern itself. These horizontal lines usually aligns with what other market participants are thinking as well, because regardless of how I move this line, it's going to be within a couple of pennies, or right. So it's going to be similar in that resistance zone. So as long as the bulls cannot get over this 340, or 443, 444 zone, then bulls are not really going anywhere. And let's take a look back here, see what that zone is. Okay, so that zone was resistance zone right here. You can see all these wicks, reject. We had our rate hike fears going on. First drop, this is the second drop. That zone was right there. a couple times before it, but it's not as good for me. I remember this price action here when it happened. So there was a lot of probably people trapped there during that time. So if it came up, there's likely sellers that want to get out break even. And for you bears, we obviously want to fill that gap. This gap right there. And we didn't even test it today because we didn't even get to 441. So it's still pretty weak selling, if you ask me. Can't even fill this gap right below us after a 1, 2, 3, 4, 5 days of a green on SPY. Even though SPY sectors, QQQ is a little bit weaker than SPY due to healthcare sector is pulling the weight now in SPY, so it's helping SPY hold up a little bit better. But areas I want to see us fill that gap and test 38 again because 438 was acting as resistance and support both sides. Here's first step: fill the gap for your bulls. Obviously, break this pull top. If we do break this 438, we'll likely go down to this 435, and we'll have to break this above Yami as well for me. And that SPY as chart is no red flags, just like QQQ. Not a lot of red flag, no red flags going on. Even if we zoom into the hourly, see it's a lot stronger than QQQ. We didn't even test the. This was an hourly downtrend with lacking follow through as well, but bull break right there at the end of the day, lacking follow through as well. So same thing as with QQQ, no follow through on both directions. So it's anybody's game tomorrow or later this week as well. Although everything is still favoring the bulls because the long-term time train is in favor of the bulls, weekly, monthly, daily. So it's all in favor of the bulls as long as we keep on seeing that. We don't want to fight the bull train. But not fighting the bull train is not the same as adding up here. No, I'm not saying to add your stocks all the way up here, at close to 52-week highs, right? That's not what I'm trying to say. I'm saying is when you do add your position on these pullbacks, consolidations, you want to keep playing bullish, right? All these consolidations, when you have these pullbacks, we never broke prior pivots. These are all pivots. Trend is still in an uptrend. I'm not saying FOMO in when this thing moves up here, you add here. All right, next thing you know, you're down and you may panic sell or something. Next move up, you add here, right? Versus adding on these pullbacks. Because these pullbacks never breaking the prior pivots. As long as the structure of the chart is still an uptrend, we don't want to fight the bulls. But we can argue we have ran quite a bit, right? So I've got to be cautious up here now. So if I do start to see some weakness, I'm going to flip to shorting the market, especially when we start forming like hourly downtrends or 4-hour downtrends, right? And we haven't seen a daily downtrend in like forever. Over here we had one. I wouldn't count that. I'll count that as a one move. Right here we had one. First move, pivot, broke the prior low as a daily downtrend. So we had a daily downtrend since March 10th, 4 months ago. This was not significant. It was just a small. It was literally a bear break for one day, and the bulls took over. So that was no bear follow through on that day. We'll see if chart starts to show us weakness. I'll let you guys know. All right, start taking a look at the big 7 tech stocks. Nvidia. Nvidia is red today, so weaker than QQQ. So I was saying is that semiconductor sector can potentially shape up being a leading indicator that QQQ may pull back soon because semi pulled back first. So they could take a look at each semiconductor sector. This, right? So big drop, just like QQQ. Big bounce, just like QQQ. And remember I talked about that equilibrium shaping up? We had a big drop today. So let's say we bounce again. That can also shape as a, or we break through this 47, then we'll have a daily downtrend confirmed for the very first time since, let's say, this, call it a double top, a small break of daily downtrend, but just call this in one move. It's not very clear. So we have a daily downtrend since right here. That would be a more clear move for me. Once we broke this support right there, you can see that drop. So yeah, this is if semiconductor might be the leading indicator for us to see if we continue dropping, then QQQ can potentially, QQQ hasn't shaped up that as weak as semiconductor yet. Just a small wick, while the semiconductor sector was 2%, almost 2% red today, right? So Nvidia did not make a new high, right? It's shaping up. We had a bull break above, yes, Monday's high, 428 high, right? Broke above, we should have followed through and test this 437, in my opinion, because that was a bull break above this resistance. But we came all the way down to it and went red. So that's an initial red flag for me, right? Remember back here, we had this similar thing, but it was it was different because we didn't break resistance and lack follow through. So it was not the place where we were going to be testing these levels yet. But this one was where we broke above resistance, where we should have gone to the next resistance, and we came all the way back to it. So, but obviously tomorrow we bounce off here, have a big green day. This whole thing would have been done. It would be different, right? But if we do shape up that pivot, lower high, then there's a good chance that we're going to come down here and test this 404 level again. And if we do break 404 level, where this candle's low, 401, that's a daily downtrend confirmed. Very first time since Nvidia's daily downtrend confirmed since right here. So it's been, wow, okay, 7 months. This was like a little pivot right there and broke. So you can say that's daily downtrend. Mini one, but so yeah, that's how strong this Nvidia is. So if Nvidia starts to weaken, right, the semiconductor sector is going to weaken, and semiconductor sector weakens, QQQ is going to weaken, right? Because in the semi sector, a lot of it holdings are also in QQQ. So we'll see if this actually shapes up. We get another red day, then it's gonna that would be the pivot. Because let's see, pretty sure Nvidia is an hourly downtrend due to the size of that candle. Let's take a look. Yep, initial red flag for us because that's a hourly downtrend with no bounce. Right, QQQ had a bounce right here, right there. Hourly downtrend confirmed and the bounce. Right? Bottom wick here. So that is showing me that semiconductor is a lot weaker than QQ today, right? That's just an initial red flag. We're still uptrend in every time frame, weekly, every time you can think of. But now we have a an hourly downtrend for our initial very first step. I always talk about this. This is just the first step the bears need to show us, right? So now the bears is like, okay, showing us that Nvidia is weaker than the other tech stocks just today, right? So it gets other bears interested when we do break this 420 level again, right? News breaks this 420 level while it's being more red than other sectors, like being more red than Meta or Amazon, then it can bring shorts interested in shorting the stock, right? As of now, bears got the first step, so we'll see if they can follow through or not tomorrow. And if they don't, we bounce off of 420. We're going back up to 437. Obviously, we need to break this high first before we test the 437. Likely scenario. If we do break 420, we're going to come to 404. That'll be a slight win for the bears. All right, Tesla. So Tesla is outperforming QQQ today again due to, you can see, Tesla being up 1% while QQQ up flat 0%. So that's outperforming, meaning it doesn't need QQQ's strength to be up. So that is showing us the EV sector is still currently in strength due to Tesla having a delivery of 466,000 over the weekends. You can see that was this gap up over here. So as long as bears can't even fill this gap, they aren't really going anywhere at all. Because same thing with most of the big tech stocks, every trend is in favor of the bulls. Monthly, weekly, daily, and even Tesla, I think hourly is in favor of the bulls. Yep. Didn't even form an hourly downtrend, as you can see. So if QQQ forms an hourly downtrend, while Tesla doesn't, that means Tesla is holding a lot stronger. And actually, the 12 EMA guy on the hourly for your short-term scalpers is working perfectly for the last 2 days. So you can see bounce, 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 just trending on it. So the very first step for bears is to form the hourly downtrend as well as break the 12 EMA. You got bounce off here as well. Broke it here, but last 3 days is trending perfectly, so it's good for scalpers to use. And trend will be our guide. So as long as the hourly trend continues, zero worry for the bulls. Bears can even take it down to 275. That's like 7% is that. Um, it's like 1%, right? Bears can't even take down 1% and form hourly downtrend in the small time frames. Obviously, the least resistance of the stock is to go up because um, these things, stocks, likes to go wherever there is the least resistance. And you need a lot of selling volume to go down to bring the stock down. But as of now, no signs of that at all. So Tesla, absolute zero red flag compared to something like Nvidia, right? If this was on Tesla stock right here, then I would say bears won the very first step, and they could potentially need to follow through um, tomorrow, next year, right? But you can look at the Tesla. Tried first move down right there. That was where Nvidia made the low. Meanwhile, while Nvidia is making that next hourly downtrend low, Tesla was going straight up, right? That's relative strength compared to QQQ. So as of now, if you're a bull, I would just set a stop loss below 275 and just let it ride because you don't have any red flags or anything tomorrow. Let's say tomorrow we get our red flag and it breaks. Well, guess what? We got stopped out with a lot of profits. If you were a bull from all the way down here, back here, you have been running up like 80%, and you get stopped out pretty much at the 52-week high. If you don't get stopped out below that strong support, keep on going, and then you may try to take profit. Maybe we come up here all the way up here, then we get that red flag, that early and far downtrend, and you already moved up here stop loss because we have a new pivot every time we go up, right? And you just step your stop off maybe over here, and you get stop off for more profits. As long as there is no red flags for bulls, just hold your gains and continue to ride it until you see some red flags, or you just decide that you have got enough profits and you decide to take profit. And that Tesla bulls continue to outperform and looks good. All right, Apple. Apple was red day today compared to every other tech stock, and which is interesting. So now we have tech intra-sector rotation of the money. So we have different tech stocks rotating money between different tech stocks. You know how back then, just a couple, like last year, when tech stocks move, they all move together. So like if all seven of them goes green, they all go green. If all seven of them goes red, they all go red. But now we have intra-tech sector rotation. So today, Apple is red while other ones were green. And so do we have any red flags on Apple? Slightly. You can see we have hourly downtrend continuing. So this is what bears want to see. But this thing is at high, and we couldn't even fill the gap today. So when we form the hourly downtrend, I'm expecting bears to take us to 190, 190 to fill that gap. And I'm a bit surprised where they couldn't, but still in favoring of the bears in the very short term time frame, like tiny short term, right? We're not saying any. This is just a daily consolidation. Daily consolidation just means the candle today is lower than yesterday's candle, just like these ones over here, right? It's lower than this one. Consolidation, move up, consolidate, move up, consolidate. Same thing down here, move up, consolidate. So we can't say this is a huge red flag or anything yet until we start shaping up differently, right? Tomorrow, if we get a huge red day and break this EM at 12, and then I'll be like, yeah, it's starting to shape a red flag because Apple doesn't really break EMA 12. So that's how strong the stock is. You can see right here, bounce, 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 bounce. All these bounces, all these bounces. Never really, we never really have anything close under the EMA 12 for 2 days, right? You can see all these bounces. And I'm talking about this 2-day time frame, EMA 12, where it never really broke at all. So you go to 2-day time frame, it perfectly trends the 2-day EMA 12 right there. So very first step for me, I want to see Apple break at least the first day EMA 12, 1 day, and then we can test the 2-day EMA 12. That 2-day EMA 12 is probably going to bounce the very first time it touches it, due to it bouncing literally 100% of the time for the past 4 or 5 months. So first step, break that daily EMA 12, and then we still have 20% from it, and 3% from that 2-day EMA 12. So it's probably going to, say if we even drop that much, it's going to bounce. And then we'll see if the bears are serious about taking this thing down, right, after it bounces. If they're not, it's probably going to bounce back at 190 again. Maybe form that head and shoulders, right? If we drop down here, perfectly bounce, forms that head and shoulders, and then it goes down. See? Not, man. Bears aren't going anywhere. This is the stock that where you just hold forever. A lot of people just buy Apple and in their IRAs or in their TFSAs and retirement accounts and just hold it. That's why it's hard to drop these stocks, these mega techs, especially one like Apple. So we'll see. But as of now, hourly trend is our guide for Apple. As long as the hourly downtrend continues, we can probably test we'll fill the gap. If you don't fill the gap, then it's just no bears, just weak, just people profit taking. That's all. No, not really selling or shorting. Just yep. So 190, strong support. Bears fill the gap, break 190, and bulls obviously all-time highs. There's not a lot of resistance up here. So if bulls bounce 190, we will probably go back to test all-time highs. Right, let's take a look at Amazon. Amazon's still in the chop zone. Interesting enough, Meta broke his chop zone bullishness, but Amazon is still in it. Yeah, so this is the 5th time we tested it. 1, 2, 3, 4, 5. Yeah, the 5th time we tested it. And zoom in to see what it looks like when it tested it. So it was just in the morning. Initial move, and that was it. Although it did bounce stronger than QQQ. So let's see. Yep, similar things, just still rejecting, but we could potentially test again tomorrow because you can see drop, bounce, and held it. Did even form an hourly downtrend while QQQ did. So it is stronger than QQQ technically, but not much stronger. Let's just say. So for you bears, if you break this low tomorrow, pivot low, 129.64, we have an hourly downtrend confirmed, and you're probably going to come down to this bait chop zone. And even if we break it all the way down here, we're still in the chop zone, right? 127. Let's say we come all the way down here and we bounce, and it just bounces again, right? There's a structural change until we break the key structures. So first thing for bears, confirm hourly downtrend, then back to the zone, and it's probably going to bounce at least a little bit first time. If we cut through it, market's probably pretty red that day. Yeah, and you bulls break this quadruple top. 132, 134. If you guys can break it. If we break that top, we're probably going to shoot straight to 134, in my opinion, because since we have been accumulating that energy for a long time. 132, 1.7%. Yeah, reasonable, very reasonable. 2.8%. On the bear side, 2.3%. And if we do break that, probably going to head to this 125, so 3.6%. Yeah, both sides are pretty reasonable. And we'll see. We'll see if the meta bull break is going to get more follow through tomorrow or not, or it would just say bull break with lacking follow through to just stop everyone out, like a stop loss raid. We'll take a look at meta in a second after we go through Google and Microsoft. Let's see how much time. 10 minutes. Google. So Google had a bull break today. So it's talking about Google being in Team Bear, like the only tech in Team Bear. Now Google is back in an uptrend. See this daily downtrend? Now bounce, big enough bounce, made that pivot, broke above the prior pivot. Google is now back in an uptrend. Pivot, this is the prior pivot. We are above that today. So that is daily uptrend confirmed. And it's, I don't want to say it's a no follow through because it's a lot of follow through, but we are slightly kind of below this zone. We're at the bottom of the chop zone. If you have to close at a high of the day, let's take a look here, see if it's any red flags in the short time frame. So no red flags. If we zoom in, right, you can just see bull break, and we just consolidation sideways. So, and this is actually an equilibrium. Move down, we move up, don't break the prior high. We move down, tighten up. So that's a potential bull flag. Yeah. So you can see even in the after hours, it's tightening up too. Exactly. All right. So tomorrow the bulls want to break this 122.5, and that'll be a confirmed bull flag. And the bears want to break back below 121.5. That would negate the bear flag. So it'll be a daily uptrend confirmed with lacking follow through. We come back down to this 120 zone. Yep. Is going to be support. But as of now, Google is back to Team Bull on the daily uptrend. So the more Team Bull tech stock there is, the more likelihood the QQQ is going to go higher. But semis is starting to show weakness just for one day though. But we'll have to keep watch on that. And if let's say tomorrow we come red day, come back down here, then that's a bull break for me, lacking follow through because the structure of this chart, this is a really strong resistance zone. Right, this is the prior chop zone where it was acting as support under it, so it's going to act as resistance. And say, are you above it? Always going to be key for me. That flag would tell us which way it breaks, if it was this a rejection or not. All right, Microsoft. Microsoft is also on Team Bull because it did the same thing. Remember I talked about yesterday, if Google's chart like this looks like Microsoft, then Google's going to join back to Team Bull, and pretty much exactly the same today. That little daily uptrend confirming. But same thing, we're not getting over the structure of the charts, even though we had a bull break. So Microsoft, I'm going to put it back to Team Middle, even though it's bullish on all time frames. As long as we don't get over this 341, it's not a lot of structural change, and we're actually closing lower each day. See, this was where it closed on Friday. This is where it closed. All right, closed right there on Thursday, and we on today we closed over here. Monday, not Thursday. It was holiday on Tuesday, so it's this Monday. So yeah, we're actually closing lower and lower. We actually broke above yesterday's high, Monday's high, and I was lacking follow through. Let's zoom in, look, see what it looks like. Okay, so same thing. Morning bull break, but it doesn't look like Google, right? Google barely retraced that much of the move. See, Google's right. Google barely pulled back. Off gave back most of the gains. Right. So let's measure this. That's not what I want. Microsoft gave back over 50% of its gains. So that's not ideal for bulls. You don't want to give back over 50%. You want to stay within 50% of your move if you're a bull. But obviously, this is just at one short time frame. It changed easily. Especially the shorter the time frame, the easier it is to change the structure. So the longer the time frame, the more important the trend is. But like I said, we don't have a structural change unless we get over this and bears still don't have anything going on in the chart because every trend is in favor of the bulls as long as we don't form. But this drop can be big enough where potentially they can shape up an hourly downtrend. We'll see or not. If not, we're going to retest this 341 for the bulls, and if that breaks, we're going back to 52-week high. Back up here, 349. Obviously, we have to break 345 first, but there's not a lot of resistance here. You can see here, up and down. So probably very easy for it to break here and test here right away. You bears break this 335, and I want to see us break this prior pivot right here. So this prior pivot low right there on the daily candle on this 332.62 where it formed this daily uptrend. We can break that prior candle right there on your bears, and we have negated the daily uptrend. Now we'll be back into a neutral trend. So that's the first step for bears. Let's see, is to break this pivot low. Bulls, not much to worry about. Hold 335, retest this 34, break above. Let's see, Meta. So Meta, been talking about 2 weeks chop zone where it finally broke bull. See this zone, this chop sideways zone. Bounce off of this 12 EMA, bounce off of this 12 EMA, so it's still looking good. Every day we make a higher high each day for the last 3 days. See, close a little bit higher, close a little bit higher, close a little bit higher. And today, boom, right? When we broke that, let's see, 289 is 15-minute time frame. 289 is right there, right in the morning. Yeah. So everyone and their grandma probably set their stop loss above 281 to 289, right? And especially when you're shorting. So right when it breaks, everybody gets stopped out. That's pretty much what happened. Right? If you were shorting, you had to cover right away. So, and at the same time, when shorts got to get cover, bulls are buying that breakout. So you have all this volume, bull volume, and shorts covering at the same time. When this 289 level broke, and you shut up for candles, it's flagging. So it's a bull flag. It's like Google. So Meta looks pretty much like Google's chart. So that's a bull flag on the hourly because we didn't even pull back to 0.382. Yep. See, it bounced exactly off of 0.382 right there. That yellow line, that's a bull flag. Bears need to break below that, 0.382 to negate the bull flag. Even if they break below that, it doesn't mean any of the meta charts over or anything. If they do break below that and they break through 289 again, just tomorrow, that's a bull break lacking follow through, meaning it just wanted to stop everybody out that was in short and trap some bulls buying that, and then said just kidding. That's what happens tomorrow. If it, we fade a little bit, consolidate here, and a weak bounce, chop around here, and break it Friday, same thing. It's a bull break lacking follow through. Just wanted to trap more people in. We'll see if this bull flag ends up playing out. This is a solid break for bull break, or this is a bull break with no follow through and just to trap people. As of now, the chances of it breaking higher is higher due to forming a bull flag. Short time frame structures can change in an instant. Just tomorrow, a candle, it's over. It's over because you just have to break this little pivot. But the key is not the flag. The key for me is 289 for bears to break through back below it. Bulls, if we don't break below that, bounces off of that, I want to see a retest for you bulls. Retest here, bounce. We're testing 300 for you bulls. So that's what I'm going to see. If we do retest this area, I want to see it bounce for it to confirm being a strong support now, while it was a strong resistance prior. Right.